Let's widen out, go big picture on earnings season. For that, I want to welcome in Sheraz Mian, Director of Research, Zacks Investment Research, for a look at what to expect. Sheraz, thank you so much for joining us this morning. All right, so you got it. Earnings season has already started in earnest, really. But in the context of all this macro uncertainty with tariffs, how meaningful is this earnings season?
So, yes, and thanks for having me, Diane. The important thing isn't so much what these companies earned in the January through March period, but how they see the June quarter, the September quarter, and the rest of the year unfolding. And in that context, I have been writing that the Q1 earnings season is less about Q1 and more about the all-around uncertainty that that companies have to deal with. So yes, guidance usually is the most important thing any earnings season, and that's an even more significant and important factor this time, with the added problem being that many of these companies don't really have the visibility to give us guidance, even if they wanted to.
Speaking of that, with the visibility related to guidance, I mean, for instance, you had over in the airlines not giving some guidance so far, or pulling back guidance, I should say. Do you expect to continue to see that pattern, or do you think it'll vary by sector?
I would expect that to be the norm this earnings season. In some respects, it reminds me of that first quarter earnings season in 2020 when COVID got underway. Obviously, the magnitude and the nature of uncertainty is different, but I would expect most of these companies across all sectors, if they do provide guidance, to be pulling back from that, and it'll be for good reasons. And I would expect the market to be sympathetic to the act of management's pulling guidance because of how much uncertainty there is all around. So yes, it'll be all around, and I don't think they'll get punished for it.
Sheraz, I want to ask you your thoughts on the banks. We've had, we had results from J.P. Chase, Morgan Stanley, Goldman Sachs out today, all beating expectations. You had some strength even when it comes to the consumer. Not in Goldman, obviously they're out of the consumer business. But what's your takeaway on these results? And then I want to ask you a follow-up thought on the consumer.
So all in all, the results are as expected, no major surprises. If there's been any element of surprise about bank results and bank expectations, it's on the in the context of the deal flow. As you would recall, post-election, hopes were high that the strengthening deal pipeline will start showing up in actual results in Q1. That has obviously been pushed out into the back half of the year, or perhaps even later. There's questions about the macro, and that has a bearing on the cyclical part of their core business. So on the whole, results are okay. But as with everyone else, the outlook is uncertain.
Right, but trading revenue looked good for these, and you can expect with volatility, especially, that would bode well for the banks. But I do want to go back to the point about the consumer. Even though you still continue to see some strength, given what we're seeing on the soft data, and that doesn't necessarily always play out in terms of hard data, what's your expectation going forward for what we can hear from the banks on the consumer?
Yes, the consumer was starting to show sign of weakness and pullback even prior to the full brunt of the tariff issue. You would recall that towards the end of the Q4 earnings season in January and February, we started seeing a number of these retail players giving us soft numbers and outlook. Walmart had it, Target had it, and a number of others. So we have known and have seen this for a while, that a segment of the consumer has been struggling. And perhaps now with the tariff issue weighing even more heavily on confidence, I think that that weakness likely is showing up in more tentativeness in other segments of the consumer economy as well.
Okay. And looking beyond the banks, we have some other key names reporting coming up this week: Netflix, United Healthcare, Johnson and Johnson's. What is your expectation beyond banks in terms of moving the needle and what investors may pay attention to this week?
So Netflix, United Healthcare, Johnson and Johnson, those are some of the classic blue chip players that are least exposed to trade issues with China or Europe or anywhere else. So that does spotlight for investors that not every company is exposed to the same extent. And the likes of a United Health, Johnson and Johnson, and Netflix can thrive and do excellent business even in tougher times like the present one.
All right, Sheraz, we'll have to leave our conversation there. Thanks so much for your insight on the earnings we've had so far and the earnings to come. That's Sheraz Mian, Director of Research, Zacks Investment Research.